So I wanted to actually jump off of what Kathleen was just talking about the low interest rate environment. Here in the U.S., do you expect that to help the property markets?
The first answer right away is yes. And what I see globally is yield starvation, I call it. Interest rates are going down so low that whether you're a pension fund, a sovereign wealth fund, a high net worth individual, you're just running like a chicken without a head saying, where do I put my money? Where do I put my money?
Right.
It's so rare that I don't go to a meeting where somebody doesn't ask me that question. And when people look at the alternatives, particularly in an unstable environment, in terms of the more safe assets, and particularly when they look at bonds, which they traditionally think is the most conservative thing, number one, the return rates are horrible. Number two, it's now actually a very high-risk investment because how low can you go compared to how high can interest rates go and then the devaluation of bonds. So for the first time in a while, investors are back looking at stable, high-quality real estate as their best alternative.
Okay, and these would include Chinese investors.
Yes.
Are you seeing any slowdown at all?
I would say that we saw a slowdown about 6 months ago when China went through that little bump in the road, so to speak. You know, I think that they put a brakes on a lot of projects, but now I'm starting to see it go in reverse. Best reflection in terms of market sentiment, if I can just give it from the other side before mentioning China, is the REITs. If you look at the high-quality REITs, whether it's a Vornado, an SL Green, a BXP, Boston Properties, et cetera, I would have to venture to say, and I have not looked at it, but probably in the last 90 days or 120 days, they're probably up 30% from where they were. And I think that's a reflection of that starvation for yield in general.
And you think foreign money is going into those REITs?
100%.
Okay.
But more particularly in the case of China, it's private real estate. Chinese are one consumer out there, whether it's high net worth individuals or institution, that I've seen at Thor Equities coming to knock on our doors saying, what have you got for us?
But what do they want to buy?
Money.
So when you say, what have you got for us, you say, I got what?
Normally we talk to them about more conservative investments. It could be office buildings, retail buildings. I sense from the folks that I see on the other side a little less risk appetite. You saw it with the construction starts, both commercial and residential. People aren't looking as much for development risk. They're coming to a company like Thor Equities for the safe play. And when I ask them, what are you looking for? They start with, let me tell you what I'm looking to run away from. And what we're looking to run away from is concerns even that we have in our own market. We see a little bit of instability. A lot of the Chinese maybe don't believe their own financial numbers.
Well, okay, but is anyone saying we're a little uncertain because of what's going on in the U.S. elections?
I was going to take it all back to that, which is funny because a lot of it is driven by the U.S. elections, and I find it so funny that the fear of whether or not Huma running for the country for Hillary or Jared Kushner running the country for Donald Trump, or Donald Trump with his latest insult, I'm sure you saw it, about my good friend Mike Bloomberg. And I've got no favoritism towards any of them, but that's making them run into real estate, U.S. real estate, which is what's so confusing. It's almost like when they look around the world, they see the Middle East conflict, they see ISIS trying to create a Muslim slash Judeo-Christian global war. You see oil prices, you see emerging market risk.
They see Brexit, all of that.
They see, most of all, Brexit. They start saying, where do we run for safety in terms of the landscape of what they have to invest in? And they look normally at the traditional places like London, New York City, Paris. All of a sudden, America is starting to look like the least risky of those different crazy environments. So for strange reasons and yield starvation, they're looking to come into our marketplace. Yes, go ahead, ma'am.
Yeah, Joe, it's Yvonne in Hong Kong. You know, you mentioned some of those developed markets. What about in terms of emerging markets, particularly here in Asia? Do you see opportunities?
Certainly do. Obviously, the whole globe one thing is going to be tied to the other and one affects the other. On the negative, candidly, is a market like Australia. I think the fact that commodity prices, oil, et cetera, still weak, make it a little tougher for them. But there's so many great emerging countries in China where people are bullish about a bounce back. It could be the Philippines, could be South Korea, could be Indonesia. There's still lots and lots of opportunities, and probably the dislocation that Asia saw in general is creating maybe a window where people can come into Asia and invest on the cheap. And the same thing back in terms of China. I think that there's two camps today in terms of investing in China. One camp says China's dangerous, stay away. They're playing with the numbers. You've got cities that have been built that are sitting there vacant. And then on the other hand, people say to themselves, great market, great opportunity. Maybe they'll go through a bump along the way, but long term, that's a place for growth. That's a place for opportunity.